Good evening, welcome back, and we are finally at module 20. It is a big lesson, it is a big module, and there are about 8 lessons here, and each lesson is pretty big, so please do go over it yourself and with me if you'd like. Let's go over lesson 1. Lesson 1 talks about salesperson's due diligence during the conditional offer period. Like I said, it is not a lot of pages, but there is a lot of reading here, so I do suggest you do read it and try to fully understand it. But we're going to go through this chapter lesson summary and see what they say. So, due diligence requirements for a buyer's salesperson during the conditional time period of an accepted offer. As the buyer's salesperson, you have the vital role to play during the conditional offer period. Your ability to be proactive, observe due diligence, appropriately assist your buyer, and maintain timelines will determine if the transaction moves smoothly. As soon as the offer is accepted by the seller, you will submit all original documents to the brokerage. The brokerage will be required to retain all trade-related documents. Among other duties, you will obtain the deposit from the buyer as directed by the agreement of purchase and sale and deliver it to the designated deposit holder. As the buyer's salesperson, you may be asked to refer third-party professionals to the buyer to assist in fulfilling any conditions or other aspects of the agreement. Third-party professionals may include a home inspector, insurance broker, lawyer, a contractor, and an appraiser. You may be required to make an appointment with the seller's salesperson or brokerage for the professional to attend the property. You may also need to be present during the inspections and discuss the results of any inspection with the buyer and the professional. You may also assist your client in assessing the results of the inspection and determine the next steps accordingly. If the buyer is purchasing a condo unit, you must make the offer conditional on the client acquiring a status certificate from the condo management and being satisfied with its content. You will be required to forward the status certificate to the buyer and the lawyer and follow up on any issues based on their review. If the buyer client decides to waive or fulfill the condition, you as a salesperson, you have the duty to ascertain if the buyer is in a position to do so. You must understand the importance of using the correct form, example waiver versus notice of fulfillment of conditions, to avoid any misunderstanding that may occur at the later stage in the transaction. Lastly, but most importantly, you should be diligent about maintaining timelines at the stage, as the conditional offer period only lasts for a finite number of days. Unexpected complications can occur, such as a third-party professional's delay in performing a service or providing a report. You should be proactive and follow leading practices for maintaining timelines to ensure the transaction does not suffer. Due diligence requirements for a seller's salesperson during a conditional time period of an accepted offer. Often the conditions in an offer are for the benefit of the buyer. The bulk of the duties in the conditional offer time would rest with the buyer's salesperson, but as a seller's salesperson, you will be required to fulfill certain key duties. You will stay in touch with the buyer's salesperson to ensure that transaction is moving ahead smoothly and there are no impediments towards fulfilling conditions. You will also keep the seller up to date on the status of the buyer's condition. As a representative of the seller, you will be required to submit all trade-related documents to your brokerage and obtain the deposit from the buyer or buyer's salesperson, as directed in the agreement of purchase and sale. Your key duty will be to cooperate with the buyer and the buyer's salesperson as they satisfy their conditions. You may be required to coordinate and facilitate any requests for inspection or visits to the property. You will have to be aware of timelines associated with any condition and instruct the seller to make the property available at an agreed upon time. To ensure the buyer can fulfill their conditions, you may be required to provide relevant documents to the buyer and additional information regarding issues affecting the transaction. You or the seller will order a status certificate from the condominium corporation if the agreement is conditional upon the seller obtaining the certificate. If any conditions are made for the benefit of the seller, you will assist the client or customer to fulfill them. Much like the case of the buyer's salesperson, as a seller's salesperson, you must be careful to use the appropriate document. A notice of fulfillment and of conditions of a waiver. You will be required to ascertain if the seller is in a position to waive a condition and advise your client accordingly of any risks without taking this action. Similarly, you must observe due diligence while accepting a waiver from the buyer. Let me just go over this in this lesson, see if we can pick up something good. So, duties of the buyer's salesperson during the conditional time period: deliver relevant documents and deposits. Cool, we already discussed that. Interactions with third-party services, so home inspector, contractor, appraiser, mortgage broker, insurance broker, and lawyer. So, and then unique considerations if the purchase is a condominium. So you must be willing to get the certificate from the condominium corporation or their management company. Managing issues: the conditional offer stage provides an opportunity for the buyer to complete the due diligence regarding any term or condition included in the agreement of purchase and sale. Okay, so let's skip this. We've talked about this. Duties of the buyer's salesperson during the conditional time period: confirming the buyer's status regarding a condition, using the appropriate document when providing a notice regarding a condition, understanding the risk of waiving the condition, leading practices for managing timeline properly. Okay, so let's move on to lesson 2. Yeah, so same thing. Let's move on to lesson 2. Lesson 2, they talk about salesperson due diligence obligations until the transaction closes. So a buyer's salesperson's due diligence requirements until the day of closing. Even after the agreement becomes firm and binding, you will be required to maintain contact with the buyer and be available to answer any questions or concerns they may have. You will coordinate with the seller's salesperson any additional visits to the property that may be required as per the agreement of purchase and sale. For example, a contractor may need to take the measurements of the flooring. For flooring, if a final walkthrough was negotiated in the offer, you will accompany the buyer to ascertain if any agreed upon repairs have been carried out and if the condition of the property is unchanged. If an issue arises at this stage, as the buyer's salesperson, you will notify the listing salesperson and try to resolve the problem before closing. As a salesperson, you helping your buyers with their moving requirements may be part of the services you offer. If needed, you will recommend moving companies to them. Remember that it is a leading practice to recommend a minimum of 3 service providers, and that any referrals for recommendations to third-party service providers must be disclosed in writing. Also, if if needed, you will provide the seller with a checklist of activities that may need to complete, such as transferring existing utility accounts or contacting Canada Post to forward mail to their new address. Seller's salesperson due diligence requirements until the day of closing. As a seller's salesperson, you will have the responsibility to maintain contact with the seller to ensure the transaction is proceeding as expected. Being in contact with the seller allows you to address any questions that may be raised by the lawyer or the buyer. You will have the obligation to coordinate any buyer visits to the property as per the terms in the agreement of purchase and sale. You will help the seller understand that they must provide a vacant possession of the buyer to the buyers as otherwise provided by the agreement. You will observe due diligence with respect to the removal of the sold sign to comply with the seller's request, as well as any zoning or community association consideration. Role of a salesperson on the day of closing. As a salesperson, you will have the obligation to remain available to the seller or the buyer on closing day. Most transactions close without incident, which means that you will not have much to do apart from inquiring with your client or customer if the closing has proceeded smoothly. However, as a salesperson, you will have the responsibility to respond to any inquiries the seller or the buyer may make to you if any issues arise. You may be required to coordinate with the other salesperson if in case of misunderstanding or real issue. If the problem is a serious one, you should refer the seller or the buyer to their lawyers. Moving on to lesson 3 is the title conveyance. So, title conveyance from buyer's perspective. Although the closing process is handled by the lawyers, you should be knowledgeable about the steps in title conveyancing and be able to provide the correct information to the seller or the buyer. All land owned in Ontario is registered under either the registry system or the land title systems. These provide the public with all documents affecting the ownership of the land, which the buyer's lawyer will review for the purchased property while conducting searches. Both systems were paper-based, but the conversion to an automated procedure has made searches streamlined and less time-consuming. The land title system operates in accordance with 3 principles: mirror principle, curtain principle, and insurance principle. The 3 principles define how the government guarantees the accuracy of the title. The buyer's lawyers conduct title and non-title searches to ascertain that their client is receiving a good and marketable title. Issues Issues like liens, outstanding encumbrances, restrictive covenants, and non-resident parties are title search issues. While non-title search issues include zoning, non-compliance, work orders, outstanding amounts owed to local utility companies, and unregistered easements, among others. A requisition letter is sent by the buyer's lawyer to the seller's lawyer seeking clarification on matters related to the searches. Upon successful resolution of the matters requisitioned, the sale progresses to the scheduled closing and a final reporting letter is prepared. So what is a marketable title? A title which a court considers to be free from defects that even an unwilling buyer must accept. Encumbrances, outstanding claim or lien recorded against property, or any legal right to the use of the property by another person who is not the owner. Zoning is the action or process of assigning parts of a town or piece of land to categorize subject to different restrictions on the use and development. A requisition, any inquiry, typically referred to as a requisition letter, prepared by the buyer's solicitor to the seller's solicitor concerning the title matters. And a final reporting letter, a letter prepared after closing by a buyer's or seller's solicitor, setting out pertinent details regarding a real estate transaction following closing. Title conveyance from the seller's perspective. The seller's lawyer reviews the requisition letter by the buyer's lawyer and prepares a response. The letter provides a list of requisition items that a seller's lawyer may need to address. If a certain requisition item remains unanswered, the lawyer may provide an assurance that the matter will be resolved. This is called an undertaking. The lawyer prepares a statement of adjustments, itemizing the financial history of the transaction. The last step is the final reporting letter following closing that sets out transaction particulars from the seller's perspective. Statement of adjustment. A statement of adjustment is prepared for every transaction. It is typically prepared by the seller's lawyer. It lays out all credits and debts to both the seller and the buyers in balance sheet form. The day of closing is apportioned to the buyer. After adjustments, the buyer may have to pay funds over and above the purchase price stated in the agreement of purchase and sale. Similarly, the seller may not receive the full purchase price if the seller owes the buyer a certain amount. Unmetered fuel, property taxes, utility charges, condo fees, and mortgage interest, if assumed by the buyer, are apportioned before arriving at a final figure. That was lesson 3. Let's move on to lesson 4. Cost associated with title conveyance. So buyers' closing cost. Buyers must be aware that they will incur expenses over and above the purchase price. As a salesperson, you will have the responsibility of explaining to the buyer the additional expenses they may be responsible for at closing. Typical expenses borne by the buyer related to adjustment costs. Other costs include land transfer tax, title insurance, legal expenses, home insurance, moving costs, and among others. So what is a land transfer tax? A sliding scale tax that applies to real estate ownership transfers, including beneficial interests. A title insurance is an insurance for owners and lenders regarding various risks and undisclosed interests affecting title. Excuse me. A land transfer tax. All buyers of property in Ontario will pay land transfer tax at the time of closing. In addition to the provincial land transfer tax, the buyer may also need to pay the municipal land transfer tax if the property is in Toronto. You will be required to explain land transfer tax to the buyer and be able to calculate what they may be required to pay. First-time home buyers refund. Correctly guide their buyers about the land transfer tax payable. You must have knowledge about the first-time home buyers refund. If a buyer or their co-owner has never owned real estate anywhere in the world, they would qualify for a land transfer tax refund of up to $4,000. The refund is based on the amount of interest the individual owns in the home. Title insurance. Title insurance is a rapidly growing concept in Ontario. Title insurance is typically purchased by the buyer to insure over title-related issues. There are two types of policies within title insurance: the owner's policy and the lender's policy. While the lender policy safeguards the interest of the lender, owner policy is the benefit of the buyer. Some of the risks covered by title insurance include a document effectively registered on title, forgery or fraud in documents affecting title, contravention of municipal bylaw, discovery of construction liens, certain existing restrictive covenants affecting the land, affecting the use of the land. You should be aware that title insurance may provide certain benefits for the perspective of both the seller and the buyer. For the buyer, use of title insurance eliminates the requirements of a lawyer's letter of opinion. It is also proven effective by insuring over certain title problems that arise at the time of closing. Title insurance also benefits the seller if they discover a problem with their property at the time of listing. Example, a deck extending beyond approved setback. They may be able to secure title insurance and confirm that the property will be insured against any losses that may occur due to the problem. It is important to remember that title policies do not solve all issues, giving exclusions, conditions, and stipulations affecting the scope of the coverage. A seller's closing cost. The seller will also have some closing costs to incur. Major expenses related to the mortgage discharge penalty, real estate remuneration plus HST, legal fees, and moving costs. The seller must consider closing expenses as well as any other additional costs before calculating the amount they expect to receive through the sale. Moving on to lesson 5. Wow, there's a lot of lessons here. A trust account requirement. REBA requirements for a brokerage's statutory trust account. A brokerage is required to maintain a real estate trust account to safeguard deposits made by the buyers in a real estate transaction. Disbursements from this accounts must be lawful and in accordance with the terms of the trust agreement with the brokerage. The broker of record needs a written notification from the seller's lawyer that the sale has been completed to transfer funds from the real estate trust account to another account for remuneration disbursement. The remuneration earned in one of the 6 common disbursements from the real estate trust account. The other 5 include excess funds, offer not accepted, return of deposit, unclaimed money, court order. Remuneration or commission trust account and disbursements. Brokerage may choose to maintain a remuneration or commission trust account. All portions or all the deposit may be transferred to this account under certain circumstances and can be used to pay remuneration. It is standard practice that remuneration will be dispersed if from the remuneration or commission trust account to cooperating brokerages, then to listing brokerage's salesperson. Any remaining amount will be transferred to the brokerage's general account. Requirements for brokerages to document trade activities. A trade record sheet must be prepared for all transactions involving a trade in real estate. The purpose of the document is to record all details surrounding the transaction and to account for deposits and remuneration payable, among other things. The trade record sheet is processed by the brokerage and is generally completed in 3 stages. As a salesperson, you must sign the document and receive a copy with the original retained by the brokerage. Moving on to lesson 6, pre-closing issues. So some of the issues that may occur prior to the completion of the transaction. Issues may come up during the pre-closing stage that may require you to advise the seller or the buyer or offer assistance to the lawyer. Some of the significant issues related to discoveries that may be made during title/non-title searches. The lawyer may discover a lien on the property or an easement that could threaten or derail the transaction. Similarly, the buyer may find that the seller has not performed the agreed upon repairs and may be unwilling to proceed. Other unexpected problems could arise that may put the transaction at risk. For example, the lender may reassess the buyer's financial qualifications and determine the mortgage amount cannot be released. There could also be a change in the condition of the property that could make it impossible for the buyer to proceed. Leading practices for a salesperson to address challenges affecting closing. You have the duty to correctly advise the seller and the buyer to the certain pre-closing problems that can be averted. Your advice will pertain to asking the buyers not alter their financial qualifications in any manner that may lead to lender denying a mortgage. You will also advise them about their moving obligations to avoid misunderstandings before closing. Certain title-related problems such as the discovery of right-of-way or easements can derail a transaction. However, you can minimize risks by making reasonable inquiries prior to making any offer on the property. How issues can be resolved. Most issues arise in the pre-closing stage can be resolved through correct and timely intervention. You will have an important role to play in ensuring that you provide the most appropriate advice to the seller and buyer. Any legal issues at this stage will be typically discovered by the lawyer, but if something new is discovered, you will direct your seller or buyer to the lawyer to ensure the problem gets resolved in an appropriate manner. Always involve your brokerage in the transaction and seek advice and assistance where required. For example, if you are unsure how to draft a certain condition in an agreement, seek guidance from the brokerage to ensure there are no problems at a later stage in the transaction. Issues related to fixtures and chattels can be resolved by accurately reviewing the agreement of purchase and sale and documenting surrounding the transaction. You must appropriately advise your seller or your buyer when you think their proposed action could lead to a breach of contract. Alert them to the legal and financial consequences of their actions. Sometimes defects are discovered at the pre-closing stage and may require some negotiation between the parties for the transaction to proceed. Often, adjustments of the price is a reasonable option that can save the transaction from failing. Your skills as a communicator and ability to conduct a transaction with fairness will determine if the transaction moves ahead. Moving on to lesson 7. Next steps if a transaction does not close. Describe how a buyer's deposit is dealt with when a transaction does not close. When the seller and the buyer agree to part ways amicably, wow, these big words are gonna kill me. Amicably. Excuse me. When the seller and the buyer agree to part ways amicably, they must sign a mutual release. In this scenario, the brokerage holding the trust money must disperse the funds in accordance with the terms of the mutual release. In cases where the seller or the buyer does not sign the mutual release, the matter could be settled through a court order. Your duties when a transaction does not close. Disappointing though it may be, when a transaction fails, you must continue to assist and advise the seller or the buyer and protect their best interest. You will be required to take directions from the lawyers and execute an action accordingly. This could include preparing the mutual release and other documents as instructed by the lawyer. You will help your seller relist their property so that they can proceed with their objectives. Excuse me. Lesson 8. After closing. What happens after closing? Let me see. What? Okay. So there's no after closing. A successful real estate career requires discipline and commitment that extends beyond the closing. A salesperson wow, I cannot pronounce these big words. God damn it. Okay. Many salesperson intuitively understand customer satisfaction, follow through, and keep in touch with buyers and sellers to build a client database. Sometimes even salesperson who are successful in sales fall victim to needless financial or other related problems due to poor organization and planning. Okay. Maintain credibility with clients. Follow up with the buyer or seller after closing transaction to see if they're satisfied. Seek the buyer's or seller's consent to place them on your mailing list and email list so that they can stay in touch. Ask them if they are aware of any friends or family members that require real estate service. Ask them to subscribe to your brokerage emails. Contact them on an anniversary of their sale and send them a personal promotion items like calendars and other useful items. Suggest that they can call you readily regarding any real estate information on inquiries. Seek expert advice. Financial advice. As an independent contractor, your taxation obligations could be challenging and complex compared to regular employees, given that you will be responsible for all remittance to the Canada Revenue Agency. Your taxes will be deducted at the source, and moreover, as an independent contractor, you will have many opportunities for deduction that an expert can advise you on. For example, a salesperson will collect HST for services rendered and remit it to the CRA after adjusting for any valid input tax credits. Seek to an accountant familiar with salesperson remuneration that can help you set up an appropriate bookkeeping system and advise on taxations relating matters. Legal and insurance related advice. Retain the services of a lawyer for periodic advice on legal matters. Also have a working relationship with an insurance broker, not just for your own personal insurance needs, but as someone from whom you can seek advice should the need arise during a transaction. Experts will not only be able to satisfy your own personal needs, but you may also approach them in any case you have a question relating to a transaction. Having resource people are available to you will raise your service level and build credibility in the eyes of the seller and buyer. Maintain a business Maintain a business journal. When dealing with multiple transactions and files, details can be complex, and due diligence dates can be confused between the various transactions. Any lack of organization on your part can lead to additional problems. By maintaining a business journal, hard copy or electronic, you can keep a record of important information and can be more effectively plan and organize your time. Missing deadlines can lead to transactions flailing. Keep track of your appointments. This will help in the future when goal setting. Appointments will also help in the future when goal setting for the next year to see where you allotted your time and how productive it was. Setting up a filing system. To successfully conclude a transaction, maintain all relative documentation necessary when dealing with either buyer or seller. This would allow you to quickly refer to any documentation that was part of the transaction. You should maintain detailed records in the business journal of all activities done on behalf of the seller or the buyer. Okay, let's move on to the next. Making appropriate remittance to CRA. Most salespersons today and their brokerage prefer that they be independent contractors. From taxation perspective, rather than employees. Generally, this means that a salesperson, you will be responsible for submitting income tax and HST payments. The brokerage will not deduct income tax from your remuneration payments. It is important to remember that the IC status applies to taxation matters with Canada Revenue Agency and not REBA. Under REBA, a salesperson are considered employees of the brokerage, and all trading is done on behalf of the brokerage. The advantages and disadvantages will be discussed further in subsequent modules. Develop a bookkeeping system that will track income and expenses, and also record and notify you regarding Canada Revenue Agency remittance requirements. Okay. Okay, so let's move on to lesson 9, I guess. Lesson 9 is a summary practice activities and then a module summary of this. Let's see if we can figure out some good information. Yeah, we've already talked about this. We've talked about all of it. So that's the final module in course 2. Wow, can't believe we've summarized all 20 modules. I hope this helped. If it's definitely helped me, I've definitely learned something. I do have an exam coming up, so wish me luck. I wish you luck on your exams. And yeah, like, comment, subscribe, let me know how I can do better, and hopefully when I get to course 3 I will figure out something that may be helpful to you and for myself. Until then, thank you, have a good night, and stay blessed.